All right, let's talk about this and more and how the broader commodity market could trade under the second Trump administration. Phil Strebel is the chief market strategist at Blue Line Futures. Phil, good morning. Good to see you.
Yeah, thanks for having me on, Frank.
All right, so we're just kind of hitting on oil and some of the oil impact. I want to talk to you about three other commodities: gold, copper, and soybean. Let's start with gold. China actually restarted its purchases of gold for its central bank in December, obviously right after the election. That's been a boost to gold prices. What are the other factors that could be an influence on gold prices, specifically those Trump tariff policies and trade policies?
So the tariff policies have really caused central banks to continue to purchase gold. We're seeing many central banks out there boosting those reserves. And what it's doing is it's helping alleviate some of the pressure, because you look at a lot of the foreign currencies, they've declined specifically against the U.S. dollar. Now, the high tariff, the high inflation possibly from tariffs could really throw a wrench in the global economy and specifically the U.S. economy. At the same time, if he does a mass deportation, you could see the labor market becomes slightly strained, and what happens is growth in the United States will start to stall out. So what a lot of traders are positioning for is more of a stagflationary environment down the road in the U.S. You lose the unskilled, labor worker. You're going to have to raise wages, and then that's how that environment is created.
All right. So again, year to date, gold's up just over 5%. Now, copper's a bit of a different story. Copper's gotten a big boost this year from strong export-import numbers out of China. Copper moving up almost 9% year to date. What are the Trump trade policies? Tariff seems like the obvious answer, but what are the Trump trade policies and tariff policies that could impact this trade?
So he really dialed back his threats to China here, specifically in the last 24 hours. And copper remains one of our favorite commodities in the metals complex, and it often acts as a leading indicator for inflation and also the economy. So you go look at global demand for copper, expected to double over the next decade. Everything from EV vehicles. Remember, an EV vehicle uses 4 times more copper than your traditional gas vehicle. You also have AI, which the increase in the intensity of computing really is going to cause that demand to go up. You're going to need better computers, new technology, also the grid renewable technologies. The tailwind is China's demand is really shifting from that property sector to manufacturing and technology. And then we also expect that constant traditional demand to pick up in 2025, construction, infrastructure spending, and also defense.
All right, so again, copper up just about 9% year to date. Now, soybeans is a bit of a different story, especially when it comes to American soybean farmers. They really rely on that export market to China. China is one of the biggest importers of soybeans. During the first Trump administration, during the trade war, a lot of impact to the soybean market because China stopped importing so many soybeans. What's the outlook here when it comes to soybeans? Why are soybeans up nearly 11% year to date?
It's pretty incredible. I mean, much of it multi-month highs. It's been the unfavorable weather conditions down in South America that's reduced the global supplies. But in 2024, China had imported a record amount of soybeans. 71% of the market share is for Brazil, about 21% to the U.S. If we do implement this hard stance, these tariffs on China, you're going to see the U.S. lose some of that market share. But it's really him dialing it back is where we've seen China, they've already secured quite a bit of soybeans ahead of him coming into office. Now, today we probably have a small shift in the weather. That's why beans are down just a little bit. But it's been a great opportunity to farmers to hedge going forward their crops, especially with corn knocking on the door of $5 and then beans back at about 10.5.
All right, Phil Strebel, really great to see you. Thank you very much.
Yeah. Thanks a lot, Frank.
All right, still on deck here in Worldwide Exchange. We're tracking